Or okay, we're live. So hey, Derek, this is Drew with LTC Tree, and we're going to talk today just a little bit about the AARP long-term care insurance endorsement. And AARP has about 37 million members. So if you're a member of AARP or AMAC, which is a competing organization, the endorsements of these organizations are important to you when you're shopping around for long-term care. We want to talk today just a little bit about the current state of events here in 2014 with respect to what plans are available. AARP originally was with MetLife, and that ended in about 2007, and Genworth took over. So Derek, tell us a little bit about that Genworth policy that they used to offer.
Yeah, in 2007, I think MetLife, they just, for whatever reason, severed the relationship with AARP. And we heard on the street that it was too much of a risk for MetLife, the members, so they just didn't want the relationship anymore. So then Genworth took over, like you said, in '07. And it was a policy that was built to be a little bit more expensive than what you could buy on the individual market. And what we kind of, I guess, analyzed from that is the underwriting we found and we heard was a tad more forgiving. So what the insurance company had to do is charge a little bit more in price to offset the higher underwriting. So if you had good health, you go to an individual policy and usually save a little bit of money. And more importantly, you'd be grouped into a rate class based on your age and current health status versus being grouped into a big mass group. Because those mass group plans, as we have seen, are notorious for rate increases.
Yeah, that's absolutely true. The other thing is the AARP policies bundled in some of the extra options, or in this industry they're called riders, that some people may not necessarily want to pay extra for. So you were paying for features. For example, even if you were a single male or female, you were paying in some of those policies for something called survivorship, which would pay off your policy when your spouse died. So that's another reason why those policies were more expensive, is because they had kind of force-fed some options.
Yeah, and a lot of times, when we're advising people on, planning for long-term care insurance, a lot of our clients are high net worth individuals who are looking just to hedge the risk. They don't need all the bells and whistles that came with that plan. They just want to ensure the majority of the risk, get the most important rider, which is the inflation rider, and leave all the other stuff off. And you couldn't do that with the AARP plan because, again, like you said, they force-fed those kind of junk add-ons, and and they paid for it too.
So let's talk a little bit about where we are today.
Yeah, and today a lot has changed, in fact, in the past few years in the industry. The insurance companies have had to adjust for a couple kind of big macroeconomic items that we've seen. The first being the ultra-low interest rate environment that's been created by the Fed past 10 years. So their actuaries, when they were pricing this insurance 10 years ago, they had no idea they would be only getting a 2.5% for a 10-year Treasury. So they had factored in more like a 5% return. So the fact that you aren't able to take your premium and earn interest on it, they had to charge more for a lot of these extra riders and just increase the overall cost of long-term care insurance.
And in addition to that, people are holding on to their policies at higher rates than expected. So they don't cancel them; they keep them.
Yeah, and another, I guess, a plus that's come from all this that's happened the past 10 years is the insurance companies they've had about 20 to 30 years of actuarial data of actually seeing claims, be filed, progress, and the outcomes. And so they've learned a lot of what conditions are the highest risk to them, and they've kind of tightened the underwriting standards. But if you're healthy enough to get in, the policies being sold today, because they've had so much more refined actuarial data, your premiums in theory should be much more stable than the policies sold in years past when they were just kind of shooting in the dark almost, using a lot of the same assumptions they used for life insurance, which turned out not to be, they were not compatible.
Well, and if you're an AARP member, while there's no endorsed product right now, because here in 2014, AARP has no carrier that they've partnered up with, which basically when AARP partners or endorses an insurance plan, there's a revenue sharing agreement that goes on there as well that a lot of members may not even be aware of. You know, people think AARP is a nonprofit, which is true. There is a separate division which makes hundreds of millions of dollars off of insurance commissions when the members buy these policies. So here we are today. If you're an AARP member, there's no endorsed product. So your best bet, and this has really always been the case, but a lot of people didn't realize it, your best bet is to shop around with an independent broker like LTC Tree, which is who we are.
Yeah, and we work with all the major companies, and we can quote all the companies and kind of give you even the federal plan. If you're a federal employee, we can show you what those rates are. So we can kind of give you a lay of the land of all the options that are out there, and we can even quote you the company that used to have the AARP relationship, Genworth, along with the other Mass Mutual, Hancock, all of them.
Right, right. And so you're able to get the best deal from the best company, not just the one that happens to pay hundreds of millions of dollars in commissions back to the AARP. So really, for consumers, this may be a good thing because forcing more of them to go shop around with independent brokers instead of just choosing the one that is checked off by AARP.
Yeah. Anytime you're dealing with these individual firms, like I was talking to a lady yesterday in St. Louis who she has an investment advisor who he works for a major investment broker. I'll leave out the name, but they just represent one company. And her instincts were correct in that when he started pushing that one company, she was like, well, what else is out there? So that's why she called us, because we work with all the companies, including the one that her broker was pitching. And in fact, she was a single female, and that company would have been the highest rates for her had she gone with him. So, I mean, LTC Tree, we're like an umpire. We call the balls and strikes as they're pitched, and we'll simply show you the company that has the best price, and of course the financial ratings or something else you want to pay attention to as well.
Exactly. So in sum, we appreciate those watching this video are probably AARP members and shopping around for long-term care. Like Derek said, we'll show you Genworth, who had the former AARP policy, and a whole spreadsheet we'll develop for you of all the other companies. So I'll let you sum it up, Derek, but I'll sign off by saying thanks, everybody, for watching.
Yeah, thanks, everybody. And if you're an AARP member and you're curious about long-term care, AARP, they're big advocates of long-term care and planning for it. I think they have a wealth of information on their site about the problem and what the options are, but they just don't endorse a product anymore. So if you want to get those quotes and have them mailed to you, please visit our site, ltctree.com. Thanks, everybody.